Hi everyone. Ken said there were a few questions about some of the XLQ spreadsheets I've been sharing in the chat room, so I'm making this video and hopefully it'll answer some of those questions. We're looking at the ATR range statistics spreadsheet that I made with XLQ. It's broken up into two halves. The first half is about 25 tickers. Those would be the stocks that I'm extremely interested in for the day, or some that might just catch my eye as the day rolls on. The second half is more for research on my master list, or my master watch list. I have about 500. I try to limit myself to 500 tickers. Any more than that, it's just too much to keep up with. So you see we've got the ticker, the name, and the price. You click in the box, you can see the formula I used. Next to it is the price again, but it's an intraday formula. This is kind of like a built-in redundancy I have for the spreadsheet, so I can make sure that it's working properly. In the green, we just have the spread between the bid and the ask, and then a 20-day moving average for reference. A lot of professional and institutional traders use the 20-day and the 5-day moving average, and so I try to factor that into my trades. In the purple box we have the ATR 30. You can see right here the ATR 30. Next to it, it tells you what the percentage of the ATR 30 is compared to the current price of $174.60. So $7.21 is 2% of $174.60. Then I have a ranking system so that I can sort them, especially down here in the research area. I might want to see which ATR is the greatest percent. Try to help me pick out big movers for the day. This next one is it's a little different. I take the 5-day moving average, and to that I add the average true range of 5 days times 2. So the average true range for 5 days, not 30. And I use this as a guide to prevent me from chasing stocks up, especially on swing and position trades. If the stock has moved up to 187.82 before I've had a chance to get in, I'm probably going to think twice about it because it's pretty extended and carries more risk. And there's many other trades that I can get into that aren't overextended, so I use this as a guide to keep me from chasing. In the yellow, we have the previous day's close and today's open. The next column, off PC, that's just click in the box here, you can see it's the difference between the current price versus the previous day's close. So it's down $6.90, the current price from the previous close. And on a lot of these, if you're confused and not sure, just click on the box and click into the formula box, and it will kind of highlight the characters that are involved. The next box is how far off the current price is off the open. And then in the final column, it's just the percentage move it's made so far. The next group, the little kind of brown or beige group, is the swing stat. What I've done is I have calculated 30 days, the difference for 30 days between yesterday's close and today's open to get this range. My thought process was if I'm going to hold a trade overnight, I'd like to know on average, at least for the last 30 days, what does it tend to do? So in this case, the 30 days worth of data, the standard deviation between the prior day's close and the next day's open would be $2.11. The minimum range is minus $7.18, and so on. You can keep going and see. If on average a ticker likes to drop significantly between yesterday's close and today's open, I'm probably not going to hold it overnight unless I have a really strong reason to do so. With this is just the basic amounts in this column. These 4 columns right here, what I've done is I've gone ahead and I've put it in price form. I've taken, you can see here, I've taken the close from the prior day and I've simply added the range maximum to it. So it's in price form. So as I'm looking at a chart, I can just look and see, you know, or if it's a watch list, I see what the price is, and I'm thinking that maybe I want to get in. The idea behind all of these is to use the data to help me determine whether that would be a good move in terms of risk reward. This one in particular is for swing trades. So if I had Tesla and it was 174.60, the price it is now, and I'm deciding whether or not I want to hold it overnight, all I have to do is look over here and say, well, for the last 30 days, the minimum move it would make overnight would be this price. So I can see it's a few cents below what it is now. But the average move is 180. So 174 versus 180, that might be worth holding. If my risk was $1